Hello and welcome to Blythe Business News. Today we are joined by Nigel Robinson, Chief Executive of Central Asia Metals Limited. Central Asia Metals, listed on the AIM market of the London Stock Exchange, produces copper, zinc and lead from its mining operations in Kazakhstan and North Macedonia. Nigel, you've just announced some very positive financial and production results. Can you tell us a bit more about them, please?
Yeah, morning, Tim. We announced on the 1st of April the full year results for 2019 for Central Asia Metals PLC. They were good results. However, unfortunately, it would almost appears like ages ago since 2019, given what's happened in Q1 with obviously the crisis around the pandemic associated with coronavirus. But I have to say, they were good results. In terms of production, we came in at the top end of our guidance range on all three metals that we produce, and actually exceeded the guidance for copper at 13,771 tonnes. So it was a good year from the production. We also had a good year in terms of health and safety. We only had one LTI, which is a lost time incident over the course of the year, which was very positive, having had 8 the previous year. So obviously an improvement in terms of the culture and the safety culture on site. And obviously those good production numbers fed through to good financial numbers for the year, despite a reduction in the metal prices that we receive for the three metals that we produce. In fact, we had an 11% reduction in zinc metal prices over the course of the year 2019, and we had an 8% reduction in both copper and lead over the course of that year. But despite that, we still generated an EBITDA, that's an earnings before interest, tax, depreciation and amortization, which is a key measure for us, of $108.6 million and a margin of 60%, which is positive in most sectors, certainly in the mining industry, but in most sectors of industries. So 60% margin, $108.6 million, and we were a low-cost operator, as we always have been, producing copper at 52 cents per pound and zinc on a C1 cash cost equivalent of 47 cents per pound. So good financial performance. Our strong cash flows from that EBITDA number of $69.8 million, which is a good number, and that's the number on which we base our dividend payout to our shareholders. And also during the course of the year, as a final point, we managed to pay down another $38.4 million of debt to strengthen the balance sheet, and that's in line with the repayment schedule that we have with the banks.
You mentioned there that you've been paying down the debt, which is great, and you're strengthening the balance sheet. You also referred to the dividend. Now, Central Asia Metals has a long history of paying dividends to its shareholders, but you've just decided not to recommend a final 2019 dividend. Looking back, was that the right decision?
Yes, indeed, that's the case, Tim. And yes, looking back, I have no regrets whatsoever over that decision. In the early days of March, when we were deciding or pondering over what dividend to pay on the back of those very good financial numbers for 2019, the board was probably in mixed views as to what we should pay. But as the month went through and the crisis kind of accelerated and increased, and the lockdowns increased, and the impact on the world's economy seemed to increase almost day by day, we recognized that now was not the time to be paying that final dividend, and that preservation of cash and preservation of liquidity and maintaining a strong balance sheet to get through this very unique situation was absolutely paramount. And we felt that was the right decision for the business, and ultimately will be the right decision for the shareholders. We feel now, having made that decision, that we've got sufficient financial strength to overcome the worst potentially of what the coronavirus can throw at us operationally. And I have to emphasize, the decision was born not so much from the low metal prices which we're currently encountering, obviously as a consequence of this, and the reduction in demand across the world, with the world going into a lockdown mode, but more the fact that it was an uncertain phase that we were entering as we go into Q2 of 2020, not knowing whether or not the local authorities or the government in North Macedonia or Kazakhstan would close us down at any one time. I mean, clearly they have cases in country. They've both announced that they're in a state of emergency and that they have got very stringent quarantine procedures in most of the major cities in those two countries. And so the threat to our business to have to go into a care and maintenance situation for 1, 2, 3 months, or maybe even longer, was we are still facing that, as I talked to you this morning, actually, Tim. So, I don't regret that decision. I think it's the right decision. When we come out of this position and there's a bit more clarity in terms of the world economy and the strength of our balance sheet post the crisis, we'll review the dividend and have a look at what we do moving forward. But yes, difficult decision, unique circumstances, but definitely the right decision. And in meetings with shareholders subsequent to announcing on the 1st of April, we've certainly had feedback that they support that decision generally. I mean, you could say some way disappointed because we have got a very good track record of paying dividends, but obviously they understand that the most important thing is preservation of cash, and actually to support and make sure that the business can survive through this very difficult patch that everybody's going through, with a lack of uncertainty for the future.
So a difficult decision, but one that you're sure is going to give long-term, medium-term upside for the business and for shareholders.
Yeah, I believe so. I believe, as you go into this kind of crisis, which is unheard of in many ways, and you look at the horrendous figures being bandied about the impact on the economy, both the UK economy, the world economy. I mean, the companies that are going to come out the better from this are those that support their local workforce, their communities, but also the companies that have a strong balance sheet. And I think we have got a strong balance sheet, and the decision not to pay that final dividend has given us the extra strength to get through whatever is thrown at us over the next few months, we believe. And as I say, when we come out of that, we will then revisit that decision, because we haven't really changed our dividend policy per se. We have a good track record, as you mentioned before, Tim. In fact, since we started paying dividends back in 2012, we've now paid $176 million, almost 98 pence per share back to shareholders. And this is the first time we haven't paid a dividend. But as I say, I think shareholders support that decision from a business basis. And, as we come out of this crisis and we look to the future with a strong balance sheet, we'll look to start returning money back to shareholders, which is appropriate with the economy and the strength of the balance sheet.
You're also a low-cost producer, Nigel, so that must help the company's position as well, mustn't it?
Oh, very much so. I mean, as we've often said to shareholders, that we have a capital allocation which is manage the business in terms of capital expenditure, pay money back to pay the shareholders back for their loyalty and their trust in us and investing in our business, and also paying off the debt. So we would hope that through this period whereby we've kind of announced no final dividend for 2019, we can continue to pay the debt down, continue to invest in the business, although I have to say we are looking at the capital expenditure aspects on site. But the fact that we have a low cost basis, as I mentioned before, the decision not to pay the final dividend was not born of the fact that the metal prices are low at the moment. We are still indeed making money on these low prices because we have such low what they call C1 cash costs. So we produce copper at 52 cents per pound, which is just around about $1,100 per ton. And copper, even though it's depressed price at the moment, is still selling just north of $5,000 per ton at the moment. So still strong margins on the business. So the low cost aspect of the operation certainly helps us through this very uncertain and testing time. And that's what we've always said to shareholders. That's where we like to operate, in the lowest quartile of the cost curve, such that we can operate in all cycles. But I have to reiterate and emphasize, the reason not to pay the final dividend was simply born of the uncertainty of having to go into a situation where maybe we had no revenue for maybe 1, 2, 3, or possibly a longer period of time, whereby you have to then look at the burn rate of your cash through the balances that you hold in the business, cash balances.
So looking back, fantastic period of production and financial performance. Looking to the future, what can we expect in terms of news coming out of Central Asia Metals in the coming months?
Yeah, I mean, this was a key announcement for us, obviously. We've just announced our Q1 production update a few days back, which also showed that we produced metal in line with our targets, and we are on track for our 2020 guidance still. I say online at the moment because every day we're facing, these potential risks from the coronavirus, but certainly Q1 2020 was a good period. We hit our guidelines. But in terms of news going forward, I mean, clearly we need to keep the market updated with how we're being affected by coronavirus. We are at Kunrad in Kazakhstan coming up to a major milestone for us, whereby we will potentially this weekend hit 100,000 tons of cathode copper. Now, in the world scheme of 24 million tons per annum, that's not a lot of copper. For But for a site that was actually deemed as a waste effectively 10 years ago, that's a hell of a milestone to achieve. 100,000 tonnes of cathode copper, pure 99.998% copper, very low costs, high quality copper from what was effectively waste dumps in Kazakhstan. So that's an announcement we'll be making. And also we've been working hard in terms of improving the metrics by which we measure ourselves for sustainability. We've, I think, traditionally always done a pretty good job. We've always had what we called a CSR director on site. He's now called the sustainability director. But all the metrics associated with improving the reporting and performance of our sustainability, so how we look after the environment, how we deal with our waste, greenhouse gas emissions, looking after the community, how we deal with the community. We're just about to put out our first ever sustainability report with a lot of information in there to help shareholders understand how we deal with ESG and sustainability issues. So we'll be announcing that as well in the near future. And thereafter, we'll be looking to, manage the business through this crisis and keeping the market updated as and when we feel it's appropriate.
Well, thank you. That was Nigel Robinson, Chief Executive of Central Asia Metals. Central Asia Metals is listed on the AIM exchange with the ticker CAML, CAML, currently trading at around 139 pence per share. That's it from Blythe Business News. See you next time.